Hello everyone and welcome to today's financial report. Let's start with the overnight action on Wall Street. The three major indices closed essentially flat. The Nasdaq slipped 0.08%, the S&P 500 dipped 0.02%, and the Dow lost 0.21%. But here is where it gets interesting. After the closing bell, futures really took off. Nasdaq futures jumped 1.28%, S&P futures rose 0.7%, and Dow futures gained nearly 0.3%. That tells us market sentiment is shifting toward risk appetite as we head into the next session. Now let's look at the macro picture. The VIX dropped to 15.21, sitting in a low range. The 10-year Treasury yield held at 4.66%, barely moving. The dollar index came in at 99.13, modestly stronger. Oil was a standout performer, with WTI crude up 1.22%, trading above $81. Gold pulled back slightly to $4,663 an ounce. The offshore yuan held steady near 6.72, with no signs of depreciation pressure. So what is the defining characteristic of today's market? It is structural rotation. Money is not leaving the market, it is rotating within the index. Nvidia fell 1.86%, Tesla dropped 1.39%, and large-cap tech clearly underperformed. But over in China, it was a completely different story. The Shanghai 50 gained 1.03%, the CSI 300 rose 0.85%, and blue-chip weights led the way across the board. Tech under pressure on one side, heavyweights gaining on the other. The signal is clear, capital is rotating from high-valuation growth stocks into cyclical and value names. And there is another important signal worth highlighting. Commodities were strong today, led by oil. That is consistent with a reflation narrative. Add in a modestly stronger dollar, slightly higher rates, and gold actually falling, and you have a classic cyclical recovery signature, not a defensive one. Our morning report got the direction right, the market did stay in a range, but we missed badly on sectors. The assumption that tech and gold would move together was rejected by the market. Energy did not come under pressure, it was actually the strongest asset class today. Putting it all together, we believe the market is in a fragile risk-on state driven by ample liquidity. We assign that a probability of 55%. A one-way rally gets 25%, and a one-way sell-off gets 20%. What does this mean for Asian markets tomorrow? As long as the dollar index holds below 99.5 and Treasury yields stay under 4.72%, Chinese and Hong Kong equities should be able to ride the strength in U.S. futures. On sectors, the strongest directions are Chinese blue-chip weights and energy commodities. The weakest direction is large-cap tech growth. Nvidia has now fallen more than 3.6% over 7 sessions, and that is a signal that deserves attention. We also saw some unusual moves in the nuclear power names, but those have not been independently confirmed, so we are treating them as observational only, not as a basis for action. On strategy, we recommend holding long positions with controlled size, with a confidence level of 0.65. If S&P futures hold above 7,700 tonight, and Treasury yields stay below 4.72%, we can maintain a bullish bias in the Asian session, focusing on Chinese blue chips and cyclical weights. But if the dollar index breaks above 99.5, or Treasury yields push through 4.72%, we should trim long exposure. The invalidation signal is S&P futures falling below 7,640, or the VIX bouncing above 16.5. In that scenario, all long positions should be closed and we move to the sidelines. One final thought for today. The market is telling us that capital is rotating out of high valuation growth and into cyclicals and commodities. The direction is clear. Now we need to see if it has staying power. Thanks for watching, and we will see you tomorrow.